Every single Bitcoin macro top occurred within the exact same 60-day period with 4 years apart exactly. In 2013, it was on the 30th of November. In 2017, 15th of December, just, 15 days later. And then 2021, 9th of November, and 2025 is coming up 4 years later. At the end of this year, if cycles repeat, we have the top of the crypto market. And you can see it visualized on this chart right here, all the different tops. We're very close to potentially the next cycle top. But some people argue like this time is different, the 4-year cycle it's going to break because we have ETFs, institutional adoption, things are different now. Some people argue that nothing's changed. The 4-year cycle is just going to keep happening because it's the repeating nature of market cycles and the credit cycle, and it just happens this way. And so I don't think it's clear to any one of you guys watching which path's going to play out. I think there's arguments for both sides. And so in this video, I want to break down the arguments for both sides, and I want to give you what I think is going to happen so that in a year from now, we can look back on this video and see if what I thought was right or wrong. And I'm also going to break down to you what I think will be the catalyst that gives us the next 50 to 70% decline in the next bear market, giving us a really, really good opportunity to get allocated again to Bitcoin. And I'm also going to discuss why I think Bitcoin, even though we've already had all this adoption, is still going to be one of the best assets to hold over the next 10 years in my portfolio and probably in your portfolio as well. If the 4-year cycle is playing out as expected, we have 80 to 120 days until the cycle top. There's not much time. That's at maximum about 4 months, okay? Now, is it the cycle top? Well, you could argue either way, and there's good arguments for both sides of the story, right? So if it is the cycle top, right? Why would that be the case? Well, it's happened the past 3 cycles. Why is it suddenly going to change now? When something happens even twice in a row, people become aware of it. And then the third time, technically, it should have not happened if people were aware of this. So it happened 3 times. It must be something more than just a random coincidence. And if you look at the timing of actually the time it takes for the bottom to form after you've had the peak of the cycle, it's exactly a year apart as well. Each time, it takes exactly a year to get to the bottom. There's like too much of a random coincidence here. There's also the aspect of it being a self-fulfilling prophecy. So if people start selling in anticipation of it being a top, prices will go low enough that all these DATs, these digital asset treasury companies, will start selling because they'll lose conviction in their Bitcoin holdings. So we're going to talk about this later. That would contribute to a self-fulfilling prophecy. This is an argument. You could say that a 4-year cycle occurs because there's an unchanging reality of human nature, right? The time it takes for you to go from fear to capitulation to complacency to excitement to euphoria. There's a certain amount of time that must occur for each of these emotions to sort of transition naturally between. You can't go from fear to euphoria in a day. It doesn't work like that. There's a time requirement to accrue capital. When all the retail lose their money at the end of a cycle, it takes them 2 to 3 years to build it back up again, maybe 4 years, right? That's why it takes time for a bull market to come back, because all the people who lost need time to make the money back to come back again. And there's also memory decay, right? It takes a certain amount of time for your memory of the lessons that you learned at the prior top to be forgotten, so that when the next cycle top comes around, you repeat the same mistake because it took you 4 years to forget the lessons that you learned, right? So that's another argument. Also, Bitcoin's already up 10x from the cycle lows. It's been uptrending for 2.5 years. Massive whales have like full exited their stacks. Like a 9 billion exit by a Satoshi era Bitcoin whale happened like a month ago. And yeah, like high school reunions are 10 years apart. Summers at the lake need a year apart. Get your heart smashed, you're not going to fall in love straight away. There's these cycles of like rebirth, and things take time, right? Time is a big variable in things occurring in cycles. And yeah, you can see with Bitcoin that has the same thing going on, right? There's also the halvening, which plays into it, the natural human calendar seasonality, and market bottoms happening on the same day, 3 cycles in a row, as we said. And also, there's cracks beginning to appear in Saylor's Bitcoin accumulation game plan. The MNAV is trending to historical lows. If you don't know what this is, we'll talk about it later. I'll make it really simple to understand for you. And yeah, it might scare other allocators away if the main player can't raise capital sufficiently and people are scared, which is what is happening right now with MSTR. So that's the argument for the cycle top. What would the argument be against it? Well, interest rates haven't even been lowered yet. And historically, the craziest part of crypto happens after the interest rates start to get lowered. And there's an event in September where it's likely that interest rates are going to get lowered there. But there's also a decent chance that they don't because of how the economy is going right now. We have, I think CPI numbers came out hotter than expected. Stocks at all-time highs, gold at its all-time high. Like markets are hot, not necessarily where you'd want to cut interest rates, but Trump might also be breathing down Powell's neck, saying, I'm going to sue you and make your life hell if you don't drop interest rates. So it could be 50-50. We might have interest rates being dropped maybe not till next year. And then also the biggest catalyst ahead of us, basically the catalyst that I think would create a cycle top, is the government buying Bitcoin. And that probably isn't going to happen for at least 3 to 6 months at minimum, because they have to put in place the infrastructure to even be able to do this. Because the US government has said they're not necessarily going to like print money and buy Bitcoin, but they have said that they would do budget neutral accumulation strategies, one of which could be a reallocation of existing gold reserves to Bitcoin. So they'd sell the gold they have and buy Bitcoin with it. Okay. And so if they did that, it would obviously take quite a long time to build the infrastructure to even facilitate that. But also, it just takes time for all these things to get passed from a legal standpoint and all of that. Interest rates and US Gov buying might not happen till next year. That could push back the cycle top, potentially. Institutional capital allocation looks different to speculative allocation. So when we had Bitcoin break the all-time high at 20K in like 21, right? We went like straight to 60K because it was a retail driven rally. Retail came in, volumes came in, they FOMO'd in, right? Institutions obviously feel the same emotions as retail does. However, they tend to allocate a little slower, a little bit more careful, because they aren't some idiot from Kentucky with 10 grand trying to FOMO in with zero investing experience. These people are a bit smarter. They're going to be a bit more careful. We already see that all-time high breaks on Bitcoin are slow. They're not like quick 3x pumps. Because an uptrend is now playing out slower, it might push back the cycle peak. Also, previous cycles ended sometimes due to regulatory shocks, right? We have China banning Bitcoin, ICO crackdowns, right, in 2017. With Trump in, who's pro-crypto, right? That seems less likely. And also the Trump admin, they've made it very clear they want higher economic growth. They want to push the economy. They want to run the economy hot. That means the bubble could go bigger than usual, might get pushed back. And also stablecoin mass adoption. In the suddenly then all at once metaphor, we're in the all at once period where we have just the world about to get mass adopted onto stablecoins, bringing all this money on chain. This money that's on chain is going to want to allocate to Bitcoin, right? So these are the arguments against a cycle top. Now, what do I think is going to happen? What's my personal opinion? I think we have a normal cycle top, or we have a 3 to 6 month delay. So it could be like topping in November, December, or pushed back to Q1 or Q2 2026. Okay, that's my personal opinion, okay? Because lowering interest rates, Trump running the economy hot, US Gov, the biggest narrative, not happening till next year, sets us up for maybe a peak later on, okay? But again, there's a lot of variables and things that can change between now and then. This is my opinion as of the filming of this video. Maybe I see something tomorrow that changes my opinion, right? But this is my current opinion as it stands, okay? Let's talk about the next big Bitcoin crash. Why do I think, with all this adoption, all these institutions, why do I think we're gonna go down 60%? Regardless of how long the cycle goes for and who's buying and who's selling, we have all the ingredients forming for a brutal bear market appearing, in my opinion. So you can see here a couple of days ago, Michael Saylor announced updated guidance, right, on how he'll go about issuing new stock and different things like that, okay? He basically changed this one, okay? And we're going to talk about what this means. I know this is complicated. I'm going to make it really simple. It's actually pretty simple to understand, okay? So Saylor just announced they will now issue new MSTR stocks. He'll like print new stock basically when it's below a 2.5x MNAV. So the MNAV is basically what is the MSTR stock worth versus its Bitcoin reserves. So let's say they have $100 billion of Bitcoin reserves, MSTR is valued at $300 billion. That would be a 3x MNAV, right? Because MSTR is worth 3 times more than the reserves that it has in Bitcoin, okay? Now, basically when the MNAV goes lower, so when MSTR isn't valued as much against its reserves, they basically are now going to print MSTR where they said they wouldn't before to pay debt obligations if required. If you read the comments of that post, people are getting concerned. Early holders are getting concerned. Some of them said they're taking profits because of, you know, what MSTR has done here. So to put it really simply, Saylor has basically increased the range of valuations, right? The range of MNAV valuations where he is able to dilute investors' shares in Microstrategy to pay debt interest, because obviously he's raising money, he's borrowing money to buy Bitcoin. When you borrow money, you have to pay interest, right? You can't just get money for free in this current economy. All this money that he's borrowed to buy Bitcoin, he has to pay interest. So he can just print new MSTR to pay off that interest, right? Bit sus, isn't it? Bit like a Ponzi. So the difference between MSTR and its value and the amount of Bitcoin reserves that it has is, from what I can see, directly related to an investor's interpretation or their opinion, their belief on what Bitcoin is going to do going forward. So if people in the market think Bitcoin is going to go crazy parabolic, it's going to go up in price, they're willing to pay more for MSTR stock because they know that the Bitcoin that MSTR holds is going to go up so much that it's going to push the MSTR stock price up. So they're willing to pay a premium, an MNAV premium. So an investor might pay a 4x MNAV for MSTR if they think Bitcoin's going to go crazy up to the upside because they're paying a premium for that exposure. Whereas let's say people think Bitcoin's going to crash, it's in a bear market, someone probably won't be paying as much for MSTR. MNAV will probably be lower. It might be like a 1 MNAV. Right? They might value MSTR at the same value as its Bitcoin reserves, which is much more likely, right? And you can see that here. This is the MNAV put on a chart, right? At the mid-March peak that we had in 2024, the MNAV was at its highest. At the peak that we had at the end of last year, right, when things went crazy, MNAV peaked as well. So you can see here that the premium that you pay is directly correlated to the sentiment of the market. This is almost like a sentiment index. It's sort of like with funding, right? At what point in time is the funding the highest in the market, right? On the derivatives exchange, it's the highest near the peak because people are most bullish. They want the most long exposure at the top. Everyone wants to long at the top. Everyone wants to short at the bottom. And you can see that visualized through MNAV, just how it goes. In a bear market, basically, my expectation is that a negative feedback loop is going to form for MicroStrategy and the companies which are also following a similar playbook. And this is all going to tie back into why I think the next crash is coming. So you need to understand all of this to understand why this big crash is going to come. So here's the feedback loop. Bitcoin price drops as it has now. Investor confidence drops. There's a lower MNAV premium, right? You can see that happening here. The MNAV's going down. MicroStrategy has a lower multiple against its Bitcoin reserves. MicroStrategy drops more than Bitcoin. Now, there's less institutional interest to invest in Bitcoin because MicroStrategy is performing poorly. The whole sentiment around Saylor and Bitcoin and MicroStrategy is sort of declining, less institutional interest. This affects the broader Bitcoin demand because Saylor is like the spokesperson for Bitcoin. So if his strategy, if his game plan isn't really working, if people aren't really valuing his stock at a big premium compared to the Bitcoin reserves, it's a reflection of the overall sentiment of Saylor. And that would lead to Bitcoin price dropping more. And then people's confidence drops more. And it's sort of like this feedback loop. But the problem here isn't with MSTR. I'm not expecting MicroStrategy to blow up. I think they're going to be totally fine in a bear market. He'll survive. Here's not the problem. The problem is that hundreds of institutions around the world have began or previously began buying Bitcoin as a response to FOMO. They felt pressure from clients, from friends, from competitors to hop on the Bitcoin train and begin buying and putting it on their balance sheet, right? Many companies who bought were barely even a functioning company. They were just hopping on a trend to pump their share price. There's literally like dead companies. Here's an example. Asset entities, right? It was a tiny loss-making education platform and they had $170,000 in revenue in early 2025 and they lost $1.6 million in the first quarter. So this is a fucking dog shit company. And they were just like, you know what? Let's pump our stock so we can dump it. We're going to buy Bitcoin, hop on the trend. And it worked. It pumped their stock 10x. They're still a shit company. They're not making money. They were just hopping on a trend. I doubt these people even have conviction on Bitcoin. They're just doing it to make money in the short term. Now, these entities are not going to hold Bitcoin when it goes down 40%, when everyone's telling them to dump it, right? These are just people who buy when it's good and sell when it's bad. It's like any person who buys a stock at the peak, who sells at the bottom. It doesn't matter whether it's someone running a company, a billion-dollar institution, or an idiot broke person with $100 to their name. They buy the top and they sell the bottom the same if they don't know what they're doing. And trust me, these people do not know what they're doing because they're not running a real company and they're hopping on the bandwagon of buying Bitcoin so late that it's a reflection they don't know what they're doing. And you can see here, I made a little tier list to explain like Saylor and, you know, the guy behind Strike, I think his name's Jack. These guys are fine. They know what they're buying. They have long-term conviction. They're going to structure their things so they don't get destroyed and liquidated. They'll be fine. Metaplanet doing a decent job too. I would say it's A tier. And then you've got like Tron doing the Saylor strategy on TRX and then asset entities as we covered. So yeah, these guys are shit. And you can see there's a full tier list here, okay, that ChatGPT made me. Right, zombie companies, pure hype, no sustainable business. So there's two types of companies buying Bitcoin that you can now clearly see. There's the true believers and there's the opportunists. An opportunist buys Bitcoin because it will pump the stock price and because they feel FOMO and they see an opportunity to make money. A true believer buys Bitcoin and they hold regardless of the price and they believe in the asset, not in the short-term opportunity that it gives them by just hopping on a trend and making their investors or whoever happy. Now, true believers tend to have gotten in early. They have a whole long-term holding preference. Opportunists get in late. They just hop on a trend. They buy near the top. True believers won't capitulate at the bottom because of the pressure from the board of directors, right? Saylor's not going to dump his Bitcoin because his board of directors was like, you have to sell it. But asset entities 100% will. They will capitulate at the bottom, sure. And they bought from a place of logic, of genuine understanding. Opportunists buy because of FOMO, quick cash, and they're going to exit the same. How you come in is how you go out. Right? You come in from FOMO, you're going out from capitulation. It's just how it goes. So I think right now we probably have 20% true believers and 80% opportunists. And to make things worse, this treasury narrative of the DATs, right? Digital asset treasuries, of companies buying Bitcoin, putting it on the balance sheet, that's expanded out to other assets. We now have Ethereum with one, pioneered by Tom Lee. We have Tron having one with TRX. We have Hype also talking about one. So the same sum of capital chasing this exposure to digital assets on the balance sheet is now being spread amongst a wider and wider sum of coins. This is sort of diluting the capital that would have gone to Bitcoin into other assets. So it means that it's harder to raise the same amount of capital to put into Bitcoin, while Bitcoin is also at higher prices. So that makes it harder for Saylor to raise money and other firms buying Bitcoin. There's less capital going into Bitcoin, harder for price to rise overall. So that's just a small contributing factor. Now, what does all this mean? How does all this tie together? Well, now we have the Bitcoin opportunist death spiral. So eventually Bitcoin's going to reach a price that enough whales who were OGs sell, and it increases the float of coins on the exchange to such a degree that distribution begins. Distribution is what happens at the top. Price will decline maybe 20, 30%, maybe 40% over a multi-month period. The hype around Bitcoin will die off, and it'll put these late entrants into losses. All these companies that were opportunists are now going to see a loss instead of a profit on their Bitcoin position. And other factors are going to begin to tie in by this point. We'll have interest rates maybe going up, stock weakness, slowing of M2, global macro uncertainty in whatever form that comes in. And investors are going to begin to panic, right? Now, eventually institutions are going to recognize what the game theory is at play here, where you have billions and billions of dollars of Bitcoin owned by various institutions who don't really have conviction. And they realize that there isn't much liquidity for them to dump, and that if they do sell, it's going to push the price down a lot. And the game theory is that the first out loses the least, right? So one by one, they're all going to realize this and go, fuck, we need to sell first, because if we wait for these other firms to start selling, they're going to make the price go lower and we're going to end up losing more money. And that's just going to lead to this sort of cascading rush for these firms to cut Bitcoin from their balance sheets when Bitcoin inevitably goes into its bear market or, significant decline, okay? As Bitcoin goes lower and lower, pressure builds for more of the stronger-handed treasury companies to sell because, like I said, there's a varying degree of conviction with these different institutions that have bought Bitcoin. Some of them will just sell at the first loss. They'll be the first ones to leave. Some of them will take a bit more. They'll take a bit more pressure from the board of directors to then eventually sign off on selling their Bitcoin. And that's why it'll be not an all at once. It'll be this gradual, they all slowly exit. How you come in is how you go out. The most opportunistic will sell first, the stronger handed will capitulate. And eventually we're going to reach an inflection point where you have the peak selling of these institutions where they basically capitulate, and they might even become forced sellers where the company goes into a liquidation event where they don't have the money to pay off the interest for the money they borrowed to buy Bitcoin, and they have to basically declare bankruptcy, or the company basically goes into liquidation, right? And then that becomes a forced seller of Bitcoin. And remember what created the last crypto bottom. Think about any asset where it had a mass forced selling event. Those events are typically the absolute bottom because there's no one who will sell an asset at a lower price than a forced seller, because a forced seller must take the discount for the speed of exit. When you have to sell today, you don't get the luxury of getting a good exit. You get the exit that it gives you. And so that's what I would expect to see, and that's when I would be wanting to buy. I'd be wanting to buy when we see a forced seller, or at least a mass liquidation event of these opportunist companies who bought in, chasing hype, who go out the same way they came in. And you can see Bitcoin is a reflexive asset. The investor's expectation of an asset drives its price, and the price drives the fundamentals, and the fundamentals give the narrative, and that gives the investor's expectations, which drives the price. So it's this feedback loop. And when an asset is reflexive, it not only goes a lot to the upside, where the narrative drives the price and the price drives the narrative, but it's also to the downside. And I don't think you can just expect Bitcoin to not have downside reflexivity where institutional adoption is only this upside reflexivity, as if the dot-com bubble never happened or any bubble driven by institutions never happened, right? Like, it doesn't matter if it's a retail investor or an institution investing, they're going to capitulate and make emotional decisions and FOMO and rush and fear in the same way. That it's not different. It's a human ultimately behind the screen, and you're not going to change that. So what does that look like? On the chart, we have the weekly 200 EMA. This will eventually curve down, and then I'd be looking at a 60% decline. I mean, if this is the peak here, then I would be saying it'd be around the 60K region. If we go to a higher all-time high, then it might actually be a higher bottom region, maybe around 80K. But yeah, the capitulation of opportunistic institutions who bought Bitcoin for the wrong reasons, I believe will act as an excellent entry at the next Bitcoin bottom. And the funny thing is, like I was saying earlier at the start of the video, if you look at every single bottom, macro bottom for Bitcoin, they happened pretty much exactly 1 year after the cycle peak. So if we peaked in November as a normal cycle, would be bottoming in end of 2026. But, you know, it really depends how things play out. But that's just another interesting sort of recurring pattern to keep in mind. Now, the final question remains, after this crash in Bitcoin, is it even something worth buying? Like, what's the next narrative? I think to understand what asset you'd want to hold over the long term, you have to be aware of generational trends of where capital is flowing on the most macro level that you can view it at on a multi-decade time frame. And I think when you look at generational wealth gaps and where capital flows based on a generation's preference for investments, right? We can see here that obviously baby boomers have most of the wealth. Okay. What happens when these people pass away? What happens when baby boomers retire? Well, let's break that down. Each generation has a preference for different types of assets. Baby boomers prefer real estate. You talk to any person between the age of 50 to 70, they'll tell you, just buy a house. Buying a house was the best decision I ever made. I bought my house for 50 grand in 1986. Now it's worth $1.5 million. I am so happy I bought this house. Talking about real estate as if the fucking trend's gonna continue, because these people only know real estate only up. And because they aren't actually investors, they didn't actually put skill into making money, they're unable to comprehend why real estate went up in that period and why it's not going to do that going forward. It's funny because, like, just because a boomer has 5 million in real estate doesn't mean you should listen to them, because most of them made money because they got lucky during the easiest period of human history, the easiest generation in human history to make money. Literally, we had a population boom, massive productivity boom, the internet came along, all these opportunities, this growth of people, consumption, inflation. Like, if you didn't make millions of dollars, you're a fucking idiot. Like, it was easy. They had it easy. And then they think that it's just going to keep happening like that. Real estate is just going to keep going up. It's going to keep outperforming inflation. No consideration for any variables that might change that. It's just funny. And obviously, older generations prefer real estate. They prefer stocks. But what does the younger generation prefer? Well, who holds most of crypto? It's millennials and it's Gen Z. These are the people holding digital assets. So what happens when in 10 years from now, 10, 20 million baby boomers pass away and their wealth gets inherited by their kids? What do they end up buying? Are they just going to keep it in real estate, or are they going to buy the assets that they hold? If you are a millennial and you hold a bunch of Bitcoin and you've made a bunch of money on Bitcoin and you believe in Bitcoin and you hold a little bit of stocks and you don't have a house, or you have your parents' house that you inherited, are you going to allocate more to Bitcoin than your parents before they passed away allocated? Yeah, obviously. Let's say you just allocate 20% of your parents' wealth to Bitcoin, right? That is, on a macro level, a 20% movement of a $1 trillion sum of money, multi-trillion dollar sum of money. That's a generational shift. And that's what's going to come for Bitcoin, because it's clear, like, millennials prefer crypto, or they have a greater preference for crypto. Okay, so this is the trend over the next 30 years. Baby boomers retire. When they retire, where are they going to get money from to live? The money that they get from the government when they retire isn't going to really do much for them. So they're going to have to start selling stocks, maybe sell their house, get a smaller house, right? That puts selling pressure on the assets that they hold. Eventually they pass away, their kids inherit their wealth. Their kids buy Bitcoin. Selling pressure for stocks and real estate. That's buying pressure for Bitcoin. When the largest generation of people pass away, which is the baby boomers, and they don't even really hold Bitcoin, right? That means that the largest generation doesn't have a selling pressure on an asset they don't hold, right? So you can see there's like a generational buy pressure for Bitcoin, a generational movement from stocks and real estate into digital assets. And on top of this, there's many follow-on effects. So as the younger generation rise into positions of power and wealth, Bitcoin becomes better integrated into society because a larger sum of people have a vested interest in its success, right? When only the young people who don't have power hold an asset, obviously the old people who think it's a scam aren't going to try to integrate it into various different aspects of society, like 401k allocations or whatever it is, right? But, that's not going to be the trend forever. If all the young people have Bitcoin, obviously when they get into power, they're going to fucking integrate, right? And this also leads to pension funds, endowment funds, 401ks allocating to crypto, which increases the size and the depth of the systematic bid of Bitcoin, right? The bigger and more integrated Bitcoin becomes, the more people have a vested interest in its survival and the more likely it sticks around. That's also the network effect, right? The network effect of Bitcoin in this instance is very powerful. How could this asset ever be killed off? Like, if all the people in positions of power hold Bitcoin, why would they kill it off? Doesn't make sense. So the closer we get to that reality, that sort of mental frame, the more likely it survives, if that makes sense, right? And you can see here, Trump, as of a couple weeks ago, opens the door for 401k retirement plans to get into crypto. And also Harvard put 117 million into Bitcoin ETF, more than Google and Nvidia positions that they currently hold. So to summarize what we've just talked about, there's 3 points we went over. We might break the 4-year cycle, but I think we probably have a cycle peak, if not in November this year, in Q1, Q2 next year. The opportunistic low conviction institutions who bought Bitcoin will likely capitulate at the next macro bottom, and I would be looking to allocate very heavy at this next bottom because I think Bitcoin will outperform major stock indexes and real estate over the next decade. Now, when I say stocks and real estate won't be good because all the boomers are selling, I don't necessarily mean that the stock market is going to go down over the long term or that real estate will go down over the long term. I don't believe that. But what I believe is that the nominal returns of stock indexes and real estate will look good, but the real returns will not look so good. Because obviously, if there's 5% inflation in a year, 5% more money in the economy, I would expect stock indexes to go up 5%, at least giving the nominal return on the increase in money. Real estate, same sort of thing. But that's not real returns. We're talking about real returns. Now, how can I help you? If you got a lot of value from this video and you're looking for guidance on how to get a good exit at the end of the bull run, or if you want someone to help you get allocated at the next crypto market macro bottom, then I run a private mastermind community where I work one-on-one with clients to build an exact game plan and portfolio to make you outsized returns in crypto. I specialize in low market cap meme coin and AI plays, macro Bitcoin accumulation and selling towards the peak, and a bit of airdrop farming, okay? So these are all strategies that we'd be working one-on-one to get you allocated to. It's designed for business owners and career-focused individuals. So if you're very busy, you want to do crypto, you got capital for it, but you just don't really have the time, then you work with me. I take the stress away, take the headache away, and you only have to really spend 5 hours a week at minimum. So if you're interested to learn more, go to this website here, enscryptomastermind.com. Sounds good. You can send an application in, but that's pretty much the end of the video, guys. Thank you for listening. See you on the next one. Cheers.